Hello and welcome to Halftime Report. I'm Ekta Batra and with me is Sonia Shenoy. Well, it's turning out to be a session where it is quite sleepy, you'd have to say, at least for the Nifty and the Sensex at this point in time. The mid-caps doing better and have picked up pace, but it is really a lot about the financials and the Bank Nifty. So the Bank Nifty, which is gaining around 0.7%, outperforming at this point in time. Just want to point out that we said this in our headlines, but one of the big cues which will be in the next couple of days is obviously the US Fed meet, which is on the 13th and the 14th. We will also have data with regards to the CPI data from the US, which will be during those days. So it's going to be a packed week next week in terms of data.
Oh, absolutely, Ekta. Hi, afternoon. But largely, this is a market that's so range bound, right? I mean, on the lower end, it's that 20-day moving average. On the upper end, it's 18,800. So we're sort of stuck between this really tight range on the index. And this 20 DMA of 18,459 is something that's been holding for a while. There are no major triggers except the US Fed meet that Ekta spoke about. And over there as well, there's an expectation of a 50 basis points rate hike, but that's on the 14th. Until then, towards the end of the year, it's generally, a bit of slow moves. But a couple of things to watch today. The Bank Nifty is outperforming. There's a 300-point gain that we're seeing on the Bank Nifty. And a lot of stocks are hitting fresh 52-week highs. So just wanted to point that out. There's Axis Bank from the frontliners. There's L&T that's at a fresh 52-week high as well. And then a slew of banks in the broader markets. Bank of India, UCO, IOB, J&K Bank, all sitting at fresh highs this afternoon. So that really is the space to be if you're a trader. But there are some regulatory headwinds for Sun Pharma. The US FDA has listed the company's Halol facility under an import alert. Ekta, what does this mean for the stock?
Well, it's definitely negative, Sonia, and it has been a very patchy year when it's come to the US FDA regulatory action on Indian pharma companies. For Sun Pharma, it is, a company where you didn't expect such a negative piece of news, and that's the reason why you're seeing the correction. So I'll just take you through the news. The company's Halol facility has been placed under an import alert. Now, the import alert basically means that all future shipments of products manufactured at the facility are subject to refusal of admission to the US. It is the strictest form of regulatory action which the US FDA can probably impose on a plant after an inspection. Now, this is until the facility becomes compliant with the GMP standards. So the company has to undertake remediation. Now, the US FDA from this particular plant in the import alert has excluded 14 products, which is subject to certain conditions. So if in case they do comply to these certain conditions, they can continue to import these 14 products into the US. Now, supplies from Halol to the US were around 3% of consolidated sales in FY22, including these 14 products. If they remove these 14 products, it's probably going to be less than 3%. So that's the silver lining for Sun Pharma. Just want to put it into perspective, this particular company has seen problems, or this particular plant rather has seen problems since the past 7 years. So 2015, there was a warning letter. 2019 odd, it got lifted. 2020, they received an official action indicated status from the US FDA, got re-inspected last year, got 10 this year rather, got 10 observations, and now that's resulted in an OAI, which is continued, and now an import alert. Now, remember that the Mohali plant also was under the scanner by the US FDA, which is Sun Pharma's other facility, just earlier this year. And hence, it seems as though there's a larger problem which the street is not liking.
Oh, absolutely. And that's the reason why the stock is down almost about 3%. All right, that's about Sun Pharma. But the first corporate on our radar is Inox GFL Group. It's on our radar today. The group includes companies like Gujarat Fluoro, Inox Wind, and the recently listed Inox Green Energy Services. Now, the group has set plans for a debt reduction as well. They are on a significant fundraising spree in the last couple of weeks to reduce their group-level debt. We have Devansh Jain, the executive director at Inox GFL Group, who's joining us now to talk about that. Devansh, thanks a lot for joining in. I remember speaking with you when the stock listed as well. Tell us a little bit about where things have progressed to in terms of the debt reduction plans. What are the steps that you take? And, by the end of, say, FY24, are you looking to become debt-free at the group level?
Hey, good afternoon. Yes, I recall very well our conversation when Green listed. Happy to be back on the show. So I think over the past fortnight, we've taken significant action. When the realignment in the group took place, we had set out a clear goal to deleverage all our operating companies. And we are happy to announce that over the past 10 or 12 months, we've taken significant actions, including the IPO of Inox Green and recently the fundraise at the fluoro level so as to clear off debts. So just to take you through the larger piece, what we've done is over the past fortnight, we've raised about 1,500 crores across group companies. 720 crores has been raised by the promoters by selling approximately 2% of our holding in Gujarat Fluoro to raise approximately 720 crores. And that net of costs and taxes led to an infusion of about 623 crores by the promoters into Inox Wind to further strengthen the balance sheet of Inox Wind as well as take off interest-bearing advances which were prevalent at Inox Wind. And in turn, Inox Wind used that 623 crores to pay off the advances which Gujarat Fluoro had given to it. So we've, with one stroke, cleared off the debt of 620 crores. Besides that, there was this corporate governance overhang which investors did not like, and we had this inter-corporate relationship which we've kind of addressed kind of cleaned up by way of doing this. So we've cleared off that. We've cleared off the inter-corporate corp governance issue which investors did not like. Besides that, obviously, Inox Green raised 740 crores in the IPO, which is primarily being used towards repayment of debt. So if you look at it now, overall, we've cleared off close to net of expenses and taxes about 1,350 crores as a group across our operating entities. From a leverage perspective, I think I would tend to believe the group now is down to about 0.15 in terms of leverage. And your question with respect to FY24, I think we have a very clearly stated goal. We intend to become a zero net debt group very, very rapidly. So I'm not sure whether it's going to take us that long, but hopefully in the next 2 to 3 quarters, we should get there.
Next 2 to 3 quarters, you'll become zero net debt on the group level. You also spoke about how you're selling 2% of promoter holding to raise 720 crores. Any more of promoter stake that would be sold to raise money in the near future?
No. We don't intend to sell any further stake at the Gujarat Fluoro level.
Okay.
I think we've completely cleaned up the corporate governance issue which prevailed by selling this 2% to pay off all the advances, net of some capacity which Gujarat Fluoro is setting up under the wind segment. We've cleared off all the advances which had to be cleared off at the Gujarat Fluoro level. So there would be no promoter sale at the Gujarat Fluoro level.
Okay. Can you explain to us what further fundraising you're looking at a group level? It might not be promoter stake sale, but any other non-core assets, anything else that is on the cards, and the timeline and the amount you're looking to raise?
So effectively, I mean, if you look at Fluoro now, we're down to about 300 to 400 crores of net fund-based borrowing, which, given Fluoro's operations are extremely strong and we're on a very, very significant run rate. I think that's something which should be able to clear up by Q1, Q2. Coming to sale of other assets to raise capital, at the Inox Wind level, we have certain warrants issued to two non-promoter entities, Samina Capital as well as two large investors. That should reflect in about 200 crores of infusion within the March quarter. So that would be used to pay down debt. Besides that, we have a 50 megawatt SPV still left under consolidated Inox Wind, which would pair off about 300 crores of borrowing. So effectively, we've sold 4 SPVs recently, 3 to Adani, 1 to Torrent. This is the last SPV under the consolidated Inox Wind balance sheet, which we expect to sell in the near future. So these two things, the warrants plus the sale of the SPV, should clear off approximately 500 odd crores from the group level debt as well.
Right,
Devansh, there are us, at about 300, 400 crores of borrowings at the wind level, which we believe from internal accrual should get cleared off in the coming financial year.
Okay, so there are a lot of numbers which you've thrown at us. Just tell us, just simplify it for us. In each of your entities, what is the current debt? How much are you probably going to look to reduce it on an absolute basis, and by when?
So from a Gujarat Fluoro perspective, we're now down to approximately 350 odd crores of term borrowings. We believe this should get squared off in the next 2 quarters. Coming to Inox Wind consolidated, our debt would be approximately 950 crores at this point in time, and this will get pared down by approximately 500 crores in the next 2 quarters. This would be done by way of 200 crores coming through warrants and 300 odd crores going away by sale of a 50 megawatt SPV. So that would bring the consolidated wind business down to approximately 400 to 500 odd crores of borrowings.
Okay.
And that we intend to clear off over the next financial year by way of internal accruals.
Okay, got that. So that's on the debt front, which is great to hear, of course, from an investor standpoint. Wanted to talk a little bit more about the business as well. Gujarat Fluoro has forayed into the EV battery segment, and that's a space that is, growing in a big way. Just tell us a little bit about the opportunity there and what kind of growth do you see?
I think over the past 12 months, we've consciously moved away towards high-end advanced fluoropolymers. I think we continue to invest on that vertical. Besides that, we're setting up one of the largest battery chemical complexes in the country. I think we're very, very bullish about that venture. I think our first plant should come up over the next 3 to 4 months. And, we expect to see hockey stick growth in that venture, given, whatever number you talk about on the EV side of things, the numbers just keep going through the roof as we keep moving forward. Having said that, I think it's important to note that the battery chemical complex we're talking about is something which is unique to us from the India perspective. And we're one of the select few companies globally to have access to this technology. I think that's a business where we should be investing close to 3,000 to 4,000 crores from internal accruals over the next 3 to 4 years. And that could be a vertical which could frankly even take up more capital as we move forward. I think it's a very high margin business, and we're very, very excited about that opportunity.
Okay, all right, Devansh, we're going to leave it on that note. Thanks very much for joining in and detailing the fundraising plans, the debt reduction plans for the group level of Inox GFL. We need to take a short break, but on the other side, our special segment, Charting Trends, we will have Rahul Sharma of JM Financial Services joining in to discuss what he's tracking. Stay tuned.
Okay, welcome back to Halftime Report on CNBC-TV18. For now, the market is very quiet. There's no real movement, actually. It's just consolidating around that 18,600 level, but the Bank Nifty is where all the action is at. Rahul Sharma, who's the head technicals and derivatives at JM Financial Services, joining us right here in the studio. Rahul, thank you so much for being with us here. Before I ask you about the overall market setup, we are at the end of the year. I have to ask you about banks because there's so much traction there. Are there still any banks where you can take a fresh upside technically, where there's, perhaps more to go?
Yeah, so banks, the first leg of this rally was highlighted by the PSU space. They've done their bit. We've advised clients to book profits in them. They've seen like the rally of possibly this phase. Now is the time to focus on the private banking space. So some of the smaller names in private banking space, they look good. Even the heavyweights like something like an HDFC Bank looks good for a 10% upside. So I think that is where the traction is. That is where the risk reward is also favorable as far as technicals are concerned.
Okay, so you're not expecting further upside or a significant upside in the likes of Bank of Baroda, the PNBs of the world, which have already they're either at lifetime highs or at fresh 52-week highs. There's no incremental upside you're expecting.
Yeah, so Ekta, as far as Bank Nifty is concerned, we are seeing at a 45,000 target possibly by budget. Now, even PSUs will do well, but on a relative scale, they have become very overheated. So a bit of correction here, maybe 10, 15, 20% correction. If it happens over a period of time, that will make them attractive once again. So clearly from a risk reward perspective, I think it's better to switch to the private banking space as compared to the PSU names.
Okay, switch to private banking. In fact, I think names like Axis Bank are still sitting at fresh highs, right? Day after day, there are fresh 52-week highs on Axis, ICICI Bank. So you're saying it's not a crowded trade just yet. There's still more to go on these names.
Yeah, absolutely. So some of the, there are two legs of private banks. You have Axis and ICICI, which have done very well. So probably the momentum traders can focus on them. Then you have the second rank stock, something like a Kotak Bank, something like an HDFC Bank, which has been broadly an underperformer as far as the other two names are concerned. So I think that is where the catch-up rally can play in. So, these are the names where we can still see another 10-15% upside in the short to medium term. And some of the small and mid-cap names are the ones, where the juice businesses where the maximum upside is in terms of headroom.
Mid-cap names, tell us.
So, in fact, we have in our small cap basket, one name that we like is City Union Bank, that is got a decent bit of upside. Another one which is like, the retailer's favorite is Yes Bank, that looks due for a good round of upside from current levels. So these are two names where we have a good bit of conviction as far as the setups are concerned, and we believe that 20 to 30% upside is a very much near-term possibility in them.
Okay, so banks is a well-known, it's an old story, right? Tell us about something new. As we head into the new year, what are the stocks where I can generate, alpha for my portfolio or technically which look good apart from banks? Either large or mid caps.
Yeah, so 2022 the markets learned two lessons. One is iron ships don't sink, and second is elephants can dance. So a few months back, the kind of moves we saw in PSU banks, not many people envisaged that.
Are you talking about ITC when you talk about elephants and rats?
So there are a lot of elephants in the room actually. So one of them is the PSE index, which is the public sector enterprise. Now there are two things happening at the same time in the PSE space. One is they have done well in this calendar year so far. Last couple of months they have seen some consolidation happening. So technically if we see, it is like a 14 year of massive underperformance that is there in the PSE index as such. Now what that translates it into is a massive upside in the long term, very significant upside in the short to medium term, and two, with the budget coming up, this sector any which ways hogs the limelight generally in December, January and February periods. So if you are a trader, this is the area to be. If you are an investor, this is the area to be. So as far as the index is concerned, I think 20 to 25% upside is a very much possibility in the next 3 to 6 months in the PSE index, which translates to about 25% plus and minus 5% for the index components as well.
So which are these picks that you have technically within the PSU or PSE space, and what is the upside that you probably expect?
Yeah, so we have to look at how the index components are placed. So the top tier, or the heaviest weights are NTPC, which is right there at the top, which is 14%. So NTPC, particularly what is happening is this stock has been in a secular uptrend since many months now, and now it seems that it is shifting gears for a newer, I would say, a possibility of another 20-25% upside is a very much likelihood in the medium term. Now, secondly, there are, what is happening is the BSE Power Index, which is, the index which tracks the power companies. There, the leadership has come back to NTPC. So, it is part of two indices. One of them, both of them, it is like a heavyweight, and we feel that at the recent pullback from 182, 183 was the high. It came down to 164. This pullback is a very good opportunity to re-enter. So, time and again, the stock has honored its 100-day, 200-day moving averages. It has seen supports at regular corrections, and I think time is now right for a follow-up round of rally from current levels.
Okay, I know I do want to get a long-term chart up of BEL, because that's another stock that you're tracking, right? And you have a 25% upside there. Almost 3 years back in December of 2019, BEL was 30 rupees, I think 25 rupees. Absolutely. And now the stock is 100 rupees. So that's the 12-month chart that we have. But if you look at 3 years, you'll notice a big run-up. Don't you think that it's juiced out here? I mean, I know you have a 25% upside, but don't you think the best is already in?
Yeah, so we have to see that, it has been like 14 weeks now that, the stock has been consolidating around this range. So generally, when you see such secular, bull runs, a consolidation always or a correction makes it a healthy re-entry opportunity. So what we feel is, the government's increased focus on use of technology for defense, that is going to be one key area, one key positive. They've got a very strong order book. I think another, the next round of rally which comes could easily take the stock to around 120, 130 odd levels. And, this is one of those stocks which has shown strong outperformance in the entire PSE space. So this is like in terms of performance, the price leader for the entire PSE basket.
Okay. So Rahul, we've spoken about PSU banks. We've spoken about private banks. We've spoken about PSEs, which you're probably bullish on ahead of the budget on a 3 to 6 month time frame. Tell us about your picks X of these sectors. What would you probably recommend? Give us something technically segment-wise, sector-wise, stock-wise.
Yeah, so clearly three areas of the market which look pretty solid as far as say the next 2-3 months are concerned. So one is the mid and small cap space. That is where a lot of I would say hot money has come back. This was one sector which was quite a laggard for an elongated period of time. I think that is where the next alpha could be generated. Second sector which looks good is of course the PSE index, which we've been talking of, public sector enterprises. And third one is IT. So IT still has about 15% of catch up to be done from say October 21 highs to current levels. So the catch up itself can translate into a good bit of upside for the IT stocks. Then possibly the performance can seep down to some of the other sectors, like auto is one. Anything that is make in India, that is also going to be in prime focus. So these are the areas of the market where we feel that there will be upside, there will be attraction for traders. If you are an investor, I think some of the themes should play out well. If you are a trader as well, I think given the next couple of months and the way we are placed as far as Nifty is concerned, there is a good bit of chance that we are able to see some good upside from these levels.
Okay, and what's your final Nifty target? We are at the end of 2022, so give us a 2023 target on the Nifty.
Yeah, so we have been very bullish on the Nifty since September. In fact, I have aired my views on your channel as well. 21,000 is where we see Nifty possibly by next Diwali. Okay. There are talks of the Fed pivot happening September, October. I think that will happen much sooner. Historically, if you see 40 years, 50 years of history, whenever the Fed has done a pivot, it has taken 9 months for that money to come back into equities.
Okay.
But we are in 2022 and things are happening at much faster pace. So I think this time around, we may see a pivot from the Fed much sooner than expected. Domestically, we have been very strong as far as the domestic economy is concerned, and the domestic flows which have supported the markets.
Just quickly, one target from you, Bank Nifty. If you're expecting the Nifty at 21,000, where do you expect the Bank Nifty?
Yeah, so I think if we take a 12-month target, we could be anywhere around 50 to 51,000 on the Bank Nifty. So I think banks is as a sector, that sector has sort of come out of underperformance in COVID periods, and there is good bit of upside left.
Okay, thanks a lot for joining in and giving us your views on the market. We need to take a short break, but the other side of the break, Sudeep Shah of SBI Securities will join in. He has
welcome back. Well, let's actually continue our focus on technicals. Sudeep Shah, Head Technicals Derivatives Research at SBI Securities, joins in now. Sudeep, hi, welcome to the show. Well, it's turning out to be an okayish kind of day for our markets. Around 54% of the market is currently advancing. What is your sense in terms of picks today? What would you strategize in the broader markets as well as the Nifty?
Yeah, good afternoon, Ekta and Sonia. Absolutely right. Nothing has been happening in the last few days. Markets are continuously in a consolidation mode. Despite the markets, like if we see Nifty now, Nifty has been making 4 lower lows in the past 4 sessions. But despite that, it is not breaching 18,450, 18,500 zone, which where the 20-day exponential moving average is there. So it is not even breaking down, and it is more of a consolidation that we are witnessing with a stock-specific opportunities. A lot of them now arising. So and specific, this is all because crude prices now sustaining below $80 a barrel. Dollar index slipping below 105, and US bond yields, 10-year bond yields also around 3.5. So a lot of these, all these reasons are leading to an improved market texture, and a lot of stock-specific opportunities are arising. So we feel that from a Nifty perspective, till it is sustaining above 18,450, 18,500, there are a lot of chances that we may scale back up to 18,750, 18,800 in the coming 3-4 sessions. Specifically, it would be led by Bank Nifty. Now, Bank Nifty, after trading in a range between 9 sessions, now we had a range-bound 9 sessions, and post that it has given a breakout. And the leaders are Axis Bank, HDFC Bank, and ICICI Bank also is not breaching 920, 925 levels, is also a positive signal. So we feel that both the indices are headed for an upside. But the real moves can come in a lot of mid caps. Now, few of the stock picks that we have today is Bharat Forge and United Spirits. So just to share about Bharat Forge, now this stock has moved a lot from the September lows of 673. to 896, and then it retraced around 38%. So now from this 825, 830 zone, it has witnessed consolidation in the past 17, 18 sessions and has given a breakout today. So what we feel is that this breakout has enough steam in it and enough momentum in it to move up to 910, 920, and can be bought with a stop loss of around 850 on the downside. The second pick we have is United Spirits. Now this stock has given a breakout after consolidating for 42 weeks. And it has been trading at its highest level post February 2022. And this breakout has been backed with a lot of volumes, rise in volumes and open interest. Also, if we see the stock, if we see the weekly charts, the stock is making a rounding base pattern at higher levels. And it is now sustaining above 925, 930 levels where there was a lot of resistance. So what we feel is that this stock could now head up to 1000 levels and can be bought with 800 from 910 stop loss.
Okay, well, thanks a lot for that. And those are the disclosures of SBI Securities on your screen. Thanks, Sudeep, for joining in. Let's slip into a quick break, but on the other side, we'll focus on a couple of stocks in the news. There's Eicher Motors, there's Macrotech Developers, so lots buzzing in trade this after halftime report on CNBC-TV18. Well, Eicher Motors is one stock that we want to look at this afternoon. The stock is up about 2% and there's a reason for that. Eicher has actually commenced its operations at a new facility in Brazil. And Brazil is a big market for Royal Enfield, which is their premium motorcycle segment. This is Royal Enfield's third motorcycle assembly unit in the Americas region and the fourth across the world outside India. And the management has said that Brazil could soon become the largest market for them outside India. There's a growth of more than 100% since 2019 when they began in Brazil. Now, if you remember, Eicher Motors' numbers have been very strong in the months gone by as well. So, you know, in November, Royal Enfield sales went up 37% year on year at 70,766 units. So, all's well on that front. However, there is a word of caution, and that's perhaps the reason why the stock has been under pressure for a while. Kotak have put out a note where they have a sell with a target price of 2,800. They say that the core portfolio without the new launch, which is the Hunter 350, the performance in the current festive period was much lower than what they saw in the pre-COVID levels, that's in FY18 and FY19. And that is because of affordability issues that we are seeing in the lower end of the market, as well as cannibalization from the new Hunter 350. So what's happening is there's cannibalization from the Hunter 350 on one hand, and on the other hand, because the Hunter is a low margin product, there is an impact on their operational performance as well. So that's just a little bit of a concern on Eicher front. Otherwise, it's positive that they have commenced, their operations at the new Brazil facility.
Okay, so exciting times coming in for Eicher Motors. That stock buzzing in today's trading session. But let's move on. JSPL wins the Monet Power bid. Vivek Iyer is here with all of the details on this story. Vivek.
Well, that's right. So, what we are tracking actually is JSPL, a very interesting acquisition done by them. So, what we understand and what we are reporting is that, JSPL has won the bid to acquire Monet Power's power plant, and this is via the IBC route at NCLT. And this particular acquisition has been done at rupees 410 crore by the company. So, now, just to understand, what exactly is the asset of Monet Power. Monet Power unit, actually, power unit is under construction, under liquidation also, and this is near the Angul steel plant of JSPL, and it makes strategic sense as far as JSPL is concerned for this particular acquisition, given the fact that the company has three significant coal mines. So Utkal B1, B2 as well as C are the coal mines of JSPL that are near this particular power plant. So again, it goes ahead, it gives visibility as far as coal supply to the power plant is concerned. So we reached out the management, we got their comment as well, and we also got the rationale for which they've gone ahead and make this particular acquisition. So this particular power plant, according to them, Monet Power's Angul plant, has a capacity of over 1050 megawatt, and Monet Power's Angul plant is at this point of time at an advanced stage of construction already, and the main reason for this particular acquisition is that this particular plant is 20% more carbon efficient versus the existing units. So going forward, JSPL believes that this particular unit will ensure cheaper power as far as their own operations are concerned.
All right, got that. Thanks a lot for that. Let's slip into a quick break. On the other side, more on the markets. It's still very, very range bound with a bit of a negative bias, but we'll get you all the big stocks of the day in just a bit. Report. There are some stocks that I wanted to point out which do deserve mention today. JK Lakshmi Cement is one of them. The stock has had a dream run this year. It's up almost about 50% odd. And today, JK Lakshmi Cement is just running away 6% higher on that name. Then there's Bharat Forge, which is coming back in a big way, despite some weakness seen in the North American truck market. I guess it's the domestic business that the street is focusing on. Macrotech Developers is up almost 3.5%. We spoke about that a while back. PB Fintech, NMDC, Karur Vysya Bank are all stocks that are topping the charts this afternoon. Apart from that, a couple of names that are hitting fresh 52-week highs. Just wanted to get that on board as well. There's something like REC, PFC that are fresh 52-week highs. And from the frontliners, it's L&T that is sitting at a fresh 52-week high with almost a 15% gain this year now. So capital goods and infrastructure is coming back in a big way. You can see it with L&T, Cummins, Siemens, etc. all doing pretty well. But with that, it is curtains down, or rather it is on this edition, it's right now. For now, it's a break that we're going to take. We're going to take a breather from equity markets and come back and talk about commodities. Manisha Gupta will be joining in. She has Peter McGuire.
Welcome back. Joining us on the show now is Peter McGuire. He's CEO at XM Australia. Peter, hi, and what a week this has been, especially when you look at the crude oil prices. Constant declines. We're trading at an 11-month lows right now. And even as there is a bit of a buying in the day today, we still are at the levels below or before Russia-Ukraine war broke out. One, how do you look at this volatility in the crude oil prices? And what's your sense on where are we closing this year now?
Well, good afternoon, Manisha. I think a couple of things. What really spooked the markets in my, I suppose, perspective was when those Wall Street bankers came out and said that they're worried, certainly as far as, the sounding of alarms and the situation that's really presenting itself goes risk off. And that, I think, has put a level of fear into the markets. It certainly was demonstrated by the price of crude, and it's had a big spank down. So, yeah, that's where the mood is at the moment. We've just got to see how that plays in the next couple of days.
Also, Peter, the run-up also came into the markets on fears of what would happen if a price cap comes in or there is an embargo from European Union, and the Chinese demand is something that the markets really played on the higher side. All of that premium really seems to be getting out right now.
Well, it could be. It's maybe a little point of evaporation, Manisha, and that's probably not unusual because it was probably all baked in, and that seems to be the storyline at the moment. So we've just got to see again, as we've discussed, the COVID situation's come to an end pretty much in China. The rebooting of that whole economy and how quickly it takes to turn it around to a consumption base. You're talking, as far as transportation, every factor across the nation and the overall themes moving forward. But as we know, Russia's considering setting its own oil price floor in response to the EU and the G7, and that still hasn't been, finalised.
Oh, yes. How are you now looking at the price moving forward? If I'm assuming, while of course there will be data that's coming in, but how important is the 14th December US Fed meeting in an event of a 50 basis point rate hike? How would you see that reacting to crude?
Well, I think it's baked in. I think that already has been pretty much absorbed by the market. So unless we see something on the surprise side, where the market is at the moment, Manisha, I think we've just got to work through to that 14th and get, it's still nearly a week away or just under a week away to get a true theme as far as how this weekend goes and leading into next week. News stories, what's happening with other banks across the world, the overall themes coming out as far as inflation stories. So, yeah, every day presents itself with a new series of issues and dilemmas. And that market sentiment, what impact it has from a trading perspective and price discovery.
Peter, also, if you've had time to pencil in yet on what is the kind of global demand and supply that we are working with, if you have those numbers with you, because the EIA data is out and they're expecting 100.8 million barrels per day of a demand and 100.7 million barrels per day of a supply. Also, when you look at the price view itself, some of those numbers are out. EIA is looking at $92 off an average for the next year. Fitch is talking about 95. Wood Mackenzie at 95 as well. But there is $100 per barrel of a price forecast back yet again from Bank of America, Goldman Sachs. World Bank itself and Enverus Intelligence talking about levels of $100 to $110 per barrel as well. So there is still a lot of divergence on how the crude prices could be in the next year. Any numbers that you're putting out?
Well, I think first off, Manisha, yeah, we understand those numbers coming out of the EIA, just under 101 million. So there's the first part of it. The second part is price. What happens? I want to see what happens as far as US dollar, whether it gets tanked further and you see it down at that 101 level for that US dollar index, currently sitting at about 105. So if that continues to crater and we see further strength as far as yen, look at what happens as far as euro and the pound, then yes, you probably will see crude edge up maybe 85 to 95, Manisha, but there's a lot of things can happen in a year in crude market, I'll tell you.
Well, you know, I also was reading reports on how people are expecting crude prices to range between 65 on the lower side to 105 on the higher side. We've clearly seen that kind of a range in this year.
Yes.
What's your sense on what could be the range in next year then?
Well, it could be, Manisha. I mean, we don't know how much lower this can go. As you know, I'm worried about what those bankers are saying and the mood on Wall Street and the overall situation as far as debt, China, all those sort of points need to be worked through. So it could edge lower. We've got, what is it at the moment? You've got WTI at $73 a barrel. I won't be surprised if it's got a 6 handle, but I'd be, you know, I don't think it's going to be there for long, but it just seems to be in a bit of a downdraft at the moment. And then to the upside, well, you listen to the Bank of America and they're saying 100. So maybe it's got that sort of range. It's going to be wild. It's going to be not straight up. It's going to be volatile. And really, that's what traders are after, Manisha. Movement. I don't think it's going to disappoint in 23.
All right. Thank you, Peter, as always, for joining us. So that is the kind of range that we can expect in the crude oil prices, ever as volatile for 2023 as well. But with that, it's a wrap on Halftime Report. Business Lunch takes all the action forward.